The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we closed out the holiday trade ahead of Christmas, we saw a little bit of green on the screen in soybeans in particular, corn pretty quiet, a little pressure of the wheat markets, mixed in livestock, outside markets, kind of a mixed bag there as well. What are we watching in this market trade as we head into the holiday period, get through Christmas into New Year's, etc.? Let's take a look at things. Joining us now on the program, pleased to welcome him to Market Talk. Corey Bratlin with agmarket.net is with us here today. Corey, welcome in. Merry Christmas to you and yours. Thanks for joining us on the show.
Yes, thank you, Jesse, and Merry Christmas to you and to everyone else. So
appreciate you being here. And, I kind of set up there. You look at Tuesday's market action as a whole. It's that holiday trade, right, Corey? It's light, low volume. We found a little bit of green here, but largely a lot of folks are already away for the holiday, and we kind of just drifted our way into the Christmas break, didn't we?
yeah, we sure did. Not real surprising. Anytime we see markets that have the holidays in the middle of the week, such as Christmas being on a Wednesday, New Year's Day being on a Wednesday next week, we've got a lot of traders, a lot of analysts are taking either the first half of the week off or maybe the second half of the week off, or most of them hopefully they're taking the whole week off and spending some time with their family and friends. So, but yeah, no, it was a very a dull trading range here today. We saw corn trade in about a 2-cent range. Soybeans around 8 cents high to low. So again, very, very quiet, subdued market here. Not a lot of action here. We're just really searching for a subtype of new information, whether it's friendly or bearish. So we're just not getting a lot out there right now.
No, we are definitely not. We're definitely not. And I think in terms of bearish news, let's start with South American weather. I mean, from everything we keep hearing, it's just ideal conditions in Brazil. And really, that's been a bearish weight over top of these markets, soy in particular here for the last several weeks, hasn't it, Corey?
It is. I mean, the South American crop got off to a little bit of maybe a later start, but boy, they caught up fast. They're well ahead of the 5-year pace of getting stuff of gotten their crop planted. And again, Brazil is the main talking point here. I mean, they were at about 154, 55 million metric ton soybean crop this year. We're looking at 169, with other analysts out there looking at 172, maybe upwards of 175 million metric ton soybean crop. So their weather conditions are just phenomenal right now. And the next 2 weeks gets us to around middle of January. It sure doesn't look real threatening. Now, with that said, we are seeing some dryness down in Argentina. Currently, to date, that's been a little bit kept under the radar just because the temperatures have been a little cool. However, now we're starting to see the temperatures maybe heat up a little bit, 4 or 5 degrees above normal. So that may start to curtail their crop size a little bit. But when we look at South America as a whole, when you look at Brazil and Argentina, and then you throw in the other countries such as Uruguay, Paraguay, they are still looking at a much bigger crop than last year, which was a record. I mean, we're looking at another 15 to 20 million metric ton on top of that. So yeah, we might see a little bit of a correction in this Argentina crop, but that's going to have more of an effect, Jesse, on the soybean meal market. Argentina is a big soybean meal exporter. They are starting to slow down, which typically, seasonally speaking, they will slow down their grind and crush between now until the spring when they get into their harvest. So that coupled with the funds being at a record short position going into the end of the year, I think traders want to kind of watch closely on the soybean meal market. That could give our soybean prices a little bit of a boost, but don't be too bullish in here because we've still got all those bushels to deal with. So
something else I think I'll throw in here too, and let you talk about this. We've seen a lot of movement with the Brazilian real versus the dollar here lately. That's had some impact on export prices and more. And in terms of the soy complex, I was worried that we were going to be looking at nines on the futures board here. We kind of built off those lows. We got mid-December a little bit, but a lot of analysts I talked to, you just look at the overall export picture, currencies, et cetera, and everything kind of weighing against this soy complex. I know a lot of folks are still concerned that there could be another leg down potentially in soybeans. What do you think?
Yeah, there is. I mean, that's our consensus is that we're seeing this little rally here in the last few weeks. Yeah, and that in like you just said, that Brazilian real to the U.S. dollar, comparison is at the lowest we've seen it for last 4 or 5 years. And it was interesting. We had a chart that we saw that showed that the U.S. consumer has noticed about a $3.50 dollar bushel loss on their soybeans a bushel in comparison to the Brazilian farmer had only lost 50 cents a bushel. So it's hard for us to compete against that. And we know with the new administration coming in, China's back there, not necessarily, they're just being on the sidelines a little bit. I think they're still got some good demand, but they're going to wait for this to wait or run its course a little bit and see how things transition into the new administration. And with the burdensome supply that we've gotten, the huge carryouts, there's no panic for them to step in and buy. They're going to be value shoppers. They're going to buy on breaks, and that's what they do.
What about the fund positioning in the corn market? Let's go over there a little bit. I've been impressed with how corn has held up here as of late. We've held above a lot of key moving averages, a little below the 200-day, I believe. But I mean, we've done pretty well despite all these other external factors. What are you looking at when you look at where the funds are and just the health of this corn market in general right now, Corey?
Yeah, the funds kind of surprise a lot of us here at harvest time, which typically is a good time to be buying. But they flipped from a big short position early this fall and built themselves a nice long position, 140, 50,000 contracts long. Now, why are they doing that? We're kind of looking at the situation of the world carryout stock keep getting smaller and smaller each USDA report. We broke below 300,000 metric ton carryout. We're down around 297, 298, and that number keeps getting lower. And when we think about that, yeah, it's still a plentiful supply, but the bulk of it is sitting here in the U.S. Okay, so if other countries are needing to buy some corn, they're going to have to come to the U.S. to buy. So our demand has been pretty strong. Some analysts have thought that maybe it's been front end loaded, although a lot of our business has been to Mexico. And Mexico, I think they agreed that they're going to start buying U.S. GMO corn again. They're agreed to, so they're not going to put the hiatus on that. I think I look for that to continue to have strong Mexico demand for the U.S. corn and keep our demand. So that puts us into the first of the year, and that coveted January 12th report. We could see demand perk up a little bit and thus lowering our carryout even more. So and we could be talking carryout in the U.S. down to 1.6 or maybe even a little bit tighter than that potentially if we see that demand continue. So I think these funds have built that long position based on the tightness of the global stocks, which are getting tighter. They're still plentiful, but the lion's share of them here in the U.S.
You bring up a great point. I mean, the December WASI, I think, caught a lot of us by surprise with some of the demand moves for corn. We all kind of thought, all right, December report, no big changes. We'll punt this till January. But now, to your point, we've set ourselves up for potentially some bullishness, some more bullishness in this corn market, depending on what USDA says coming up here in the first part of January.
Yeah, I've been in the markets for this for about 20 years, and for the USDA to make that big of a change, especially in December, caught every one of us by surprise. I think what they're doing is just kind of catching up. One thing I will stand behind the USDA, I do appreciate their numbers, and they are as accurate as anybody in the world out there. So we do have that luxury of having them. Is though they don't like to make major changes higher or lower. So to me, I think they maybe have corrected a little bit where they should have maybe made some demand increases in October, November. They kind of caught up. I don't expect them to go back the other way. So to me, they are kind of catching us up. And I look for them to stay, demand to stay steady, if not increase in the future reports coming ahead. They don't like to have those peaks and valleys. They like to more make incremental changes is what I've noticed in my tenure.
We're talking with Corey Bratlin from agmarket.net here today on Market Talk, recapping our Tuesday trade headed into the Christmas holiday. Corey, let's talk new crop corn, new crop beans. We look at that ratio right now, and I've been starting to have this discussion with folks thinking about, okay, what does this acre mix in the U.S. in 25 look like as we break down the spreads and the ratios and more? I got to think it's leaning more corn. What are you seeing right now, Corey?
Exactly that. When we look at just run the numbers here tonight after the close here today, new crop corn, new crop soybean ratio 2.27 to 1. That's the lowest that we've seen in at least the last 12 years at this case in point. Okay. Many of us are making our decisions for spring planting acres right now. And yes, that's every indication is that we're going to see more corn acres. We have heard anywhere to the tune of 2 to 3, maybe upwards of 4.5 million more corn acres, and it rightfully so. Nobody really wants to rush out here and sell sub $10 new crop beans when December corn futures seem to be holding steady and trading that 435 to 440 range. So I think we can kind of keep our money together with the corn. Also being up here in South Dakota, I've talked with some of my customers up in the both Dakotas, and we're going to probably see a few more acres of canola, maybe some sunflowers, maybe even some oats and small grains going to get put in. Soybeans are going to be tough, which in the big picture, Jesse, I look at that as being a negative to corn up front. On the back end with the higher acres, but soybeans, if we start to take 3, 4, 5 million acres of corn, yes, we have a big burdensome supply globally, but the U.S. could get a little tight for new crops. So I think we're setting up for another wild, volatile spring again, and these acre shifts are going to be fun to watch in March and in that June 30th reports.
I'll throw this with you too, and you kind of led me to what I was going to talk about next. You mentioned maybe some canola, sunflowers, oats, wheat. I mean, wheat's prices are kind of in the doldrums right now. I mean, so you wonder, does that invite some extra spring wheat potentially in the northern plains? Or if I'm looking to the south, more cotton acres potentially, depending on how this all shapes up. I guess some of what at times can be called the fringe acres where we can rotate between multiple different crops. I guess I got to think that's up for debate right now here as we close out 2024.
Yes, it is. Coming from South Dakota, lived here my entire life. Spring wheat acres in the Dakotas. A lot of it depends on what is our spring weather. If it's good planting, these guys will still plant their acres. Now, we going to attract those new acres at these current levels? No, we're not. Okay, they're going to look at some canola, maybe. They're going to look at some oats, some different small grains that they can use for feed rations. Ryegrass has been another popular small grain crop up here in South Dakota anyway, especially with the livestock. So those acres will gain a few bushels or a few extra acres, but lion's share though is the guys I've talked to here too are all expected to increase their corn acres and all coming at the expense of soybeans as of today.
Well, and I think too, when it comes to wheat, I mean, as long as we have burdensome supplies around the world, I know we've had issues in the Black Sea, but cheap Russian exports, et cetera, and then a high U.S. dollar thrown on top of it to curb our exports. I don't see much fundamentally changing our U.S. wheat picture here. Whatever class I'm looking at, I'm not seeing much here, at least as we move into 25, Corey.
No, I mean, and we're at some of the lower levels of global ending stocks of wheat that we've had in the last 5-6 years, and we still are struggling with this price. It's just we are growing a crop in a different country. We're harvesting a crop, I should say, in another country, every month or every other month. So we have that constant, steady flow of bushels, whether if they have a big crop or a shorter crop. So the market's not too worried about us running out of wheat in the world.
No, definitely not. How about as we look over at the proteins too, we should touch on livestock a little bit here. Cattle, hogs, pretty quiet into the holiday. We anticipated that. In terms of both markets, though, we had a cattle on feed report on Friday that was pretty much neutral as could be, I would say. And a quarterly hogs and pigs number Monday that was pretty close to the estimates as well. Any notes for you across the protein sector as we head into Christmas, Corey?
Yeah, we got the cattle on feed coming right spot on what the trade is expecting, about a 4% lower cattle on feed number. So no major changes there. I think with the feeder cattle and the live cattle, with the funds holding such a huge long, close to record long positions, I think this correction that we've seen here the last week or so has been more of a function of funds just hey, it's going to be month end, quarter end, year end. Let's shore up our books and let's show some nice profits for the end of the year. I still think in long term, the cattle market still looks friendly. We got some tighter numbers. We got strong demand. Right now the market is going to be watching the global or the U.S. economy too. If we can keep that demand, I do kind of think these cattle prices can bounce back. Now, one thing I want to throw in caution in the wind here a little bit is we might resume the cattle coming out of Mexico. So we might start seeing some feeder cattle come in out of Mexico sometime in January. It's been talked a little bit, so that may kind of damper our market just a little bit. On the hog price market here, yeah, we had the pig report yesterday. Kind of surprised many in the trade. They thought we would see the total hog and pigs number be down a little bit more than what they were. So there's some question in there if how accurate are these numbers, but they are the numbers that we got to trade. But overall, demand for hogs are pretty good. I think there's still a big question if the numbers are actually truly out there. So, but yeah, I think, we got to watch a couple things. Just watch this demand and watch the overall U.S. economy. If we don't see any major changes there, I do look for protein demand to pick back up again and these prices to maybe put a little more premium back into them after the first of the year.
That's a good point you make. I mean, with year end coming up and a lot of book squaring and things of that nature, I guess that could kind of bring me to one other thing we should touch on, just overall risk management. I mean, it's that time of year where we tend to not look at things. We're busy with families and our loved ones, et cetera. But, don't lose sight of your risk management, whether it's grains, livestock, et cetera here. Because as we know, low volume, end of the year, things can get a little volatile and maybe some sort of rally happens that you weren't anticipating. So you got to kind of be on your toes, right, Corey?
Yeah, you sure do. I mean, risk management's the name of the game. We're in, especially in the grains, we're in low margin environments right now. So having that risk in place to keep your money together is big. Cattle, we're going to end the year with near record high prices that we've ever seen. So there's nothing wrong with coming in here, getting an established floor, maybe have some upside. Everybody's risk tolerance is a little bit different, but that's where we come into play, Jesse. We are more than happy to help folks out on that. But no, be cognizant of where this market is. Don't be too greedy in here, and just take what the market gives us.
Anything final you would add or reiterate to folks here today, Corey, before we close it out?
Just keep track of your markets. These new crop corn prices, if they start getting in that 450 area, might want to be, considering to lay off some risk. And these cattle prices too, they are at some extremely high levels. Yeah, we've had a correction, but we get a bounce back up. Let's lock these in, because when everything's is really bullish or really bearish, that's when the thing turns on us for no apparent reason until after the fact. So
very true. Very true. Good stuff. I know folks can find more online, agmarket.net. They can also sign up for the Farming for Profit, Not Price conference happening in Nashville, February 2nd and 3rd. All the details and more, agmarket.net. Corey Bratlin, great to have you with us here on the show. Merry Christmas, Happy New Year to you and yours, and we'll look forward to talking to you again soon, Corey.
You bet. Thanks, Jesse. Happy New Year and Merry Christmas.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.